Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Happy Sunday, everybody. I hope you've had a great weekend. Today we're going to be doing our daily cryptocurrency market update, and these updates are becoming increasingly more important and relevant because within these updates, and we've been doing them for nearly 3 months now, we've constantly stressed the fact that you need to look at the external world around us in terms of finance, in terms of the stock market, equities, commodities, so on and so forth, to really get a good understanding and a clear view of what's happening to the crypto space. Reason being is because there's many of the same actors now involved within the crypto space that are in the traditional financial world. And that's why we're seeing the headwind, the downturn that we currently are. It's why the 4-year cycle theory also didn't play out in a similar fashion to what it had previously done, like 2017 or 2013, where we saw this parabolic end to the year, which is what we were expecting. But of course, we didn't really take into account, or we certainly knew that there was institutions involved, but didn't fully understand the gravity of what that meant for the crypto space. We're now playing a different game. So these updates are becoming increasingly more important. This update in particular is going to have to be quite short and sweet. I'm going to try and keep it around about 10 minutes because I'm doing quite a bit with the Discord today, where we're going to be talking as a community on our macro view and outlook for the crypto space over the coming months. And it has a lot to do with what the Federal Reserve are going to do or not going to do. This is an article from the Financial Times. Fed expect to back first pandemic era interest rate rise in March. We previously said and have spoken about the fact that the Fed weren't going to up interest rates until they had tapered off bond purchasing and sort of looked at the balance sheets, because it would be counterintuitive. So the Fed at the moment, certainly given the midterm elections, there's politics at play here. We will be diving into the markets in just a second. I'm just going to get this sort of statement out of the way. We saw a bit of an uptick, but you guys know I have said I'm not going to jump into a shark-infested water when I don't know what's below me. I don't know how many of you guys are divers or have ever done any kind of sea excursions, but typically before you go overboard, you want to know what's beneath you. And it's always better to let the dust settle, in my opinion. The only thing I did pick up the other day was some Cardano on this wick, just because typically these wicks get bought into, and of course I'm a net accumulator across the board for crypto. So back to what I'm talking about in regards to this. There's politics at play. You've got the midterms coming up, and this, they can't. If you've got 40% of Americans that don't even have £1,000 in saving, $1,000, sorry, they don't use pounds in America, they are going to be pretty peeved off with the fact that inflation has eaten away at their wages, their small amount of savings that they have through really no fault of their own, because that's kind of how the system works. And they're going to have to be seen to do something to protect them and in the name of them. So there's lots going on, but the Fed also can't up interest rates too much because they'd completely implode the entire leveraged system that we have at play. So there's this balancing act taking place, and we're getting the brunt of it. And I would definitely argue that what took place with crypto, given the kind of very low volume that we're seeing generally, which has magnified the movement to the downside. Remember, we've spoken about how price is determined via buy and sell pressure on that day, so it's determined at the margin. New money coming in, or new money going out, or old money going out. So there's lots to take in here. So we're going to do a number of things in this video. We will take a look at the overall market. Always good for me to get that sort of a statement out of the way of. Remember, the reason that one confirming factor that we know that it's more institutional money that's kind of going, okay, we're going to risk off at the moment, is because we also saw the S&P dive, the NASDAQ. We didn't see WTI crude oil drop, crude oil, which is a commodity. Now, we've not spoken to you guys a lot about commodities. What category also would you guys, I don't know how many of you guys are really into finance on a kind of macro scale, would you put crypto in? Would you say it was a commodity or an equity? Where would you class that? Or would you say it was its own asset? I would say it's leaning towards its own asset. But the reason we haven't seen this see such a sharp decrease with everything else, in my opinion, is because inflation just simply doesn't go away. And this is why I'm still so bullish on Bitcoin. Had a lot of people saying, how can you say you're bullish given the sort of sentiment of the price action? I've been bullish on crypto for 4 years, and I'm still very bullish on it today. And anybody out there that can honestly say that they don't see the potential for this space and the sort of value that it can capture, in my opinion, and it is my own humble opinion, has not done the due diligence into what's actually really taking place here. We had news from Intel, Google. They're all moving the entire world. All these big companies, all these big institutions, 300 small banks in America are all moving towards facilitating, using, and allowing cryptocurrency in some way, shape, or form. So this is the way the world's moving. There's turbulence within that. And in a risk-off environment, this is an article from CoinDesk. Market wrap, cryptocurrencies tumble as global investors reduce risk. And this, of course, is in the wake of what the Federal Reserve are doing, and how that may have an impact negatively on the market. So they're going to take that risk off the table before the event takes place. And that's what you're seeing. This isn't particularly a retail dump, although what typically happens, why I'm not in the business, and we will talk about Bitcoin because it is at a typical level on your RSI. And this is an article, I believe, talking about it. It's very oversold. And whenever historically you've been at these levels, you can see they've timed a low pretty perfectly. So may it be a good time to accumulate? May it not be? We will talk about it a little bit as we go on with this video. So let's get into it. Markets saw a bit of a bounce up today. This is just really because people are going to be stepping in and buying the dip. The macro sway of things is really going to determine what happens from here on out. That's just whether you like it or not, what's going to take place. But there will be a resurgence. There will be a risk-on period where are we starting to see now these potential interest rate hikes already get priced into markets, and markets are just accordingly ready for them, so that when the actual rates do come around, we continue to see that growth. And I do think we are going to continue to see growth, but we've just got to shake out and kind of get rid of that scared money before we do so. And this, of course, is the bond yield. This is the 10-year Treasury bond note yield, which is something I'm going to start talking to you guys a lot more in depth about into the future, because bonds have almost got 100%, and what they do have almost got 100% hit rate in determining markets. So this is another article. Bitcoin records all-time high network difficulty amid price fluctuations. We're also the highest hash rate that Bitcoin has been. Obviously, we know we took a huge hit when China banned it. So as far as the network goes, as far as Bitcoin as a crypto, it's never been so strong. It's never had so much interest, and so on and so forth. The only thing that's changing is the price, which is determined at the margin, which means that it's a very small amount of people and a very small percentage of overall Bitcoin that's actually determining the price right now. And there's a lot of value that is yet to get realized, and that's why I'm a hodler ultimately. The next article that I have, and this article, just to go back to it very quickly, it talks about markets as a whole. We've been on about this for months and how they're very correlated and tethered. It also talks about a liquidation spike. This wasn't typically a liquidation. So when I say this wasn't retail necessarily, what I mean by that is it wasn't a record-breaking liquidation spike that we saw. Yes, there were quite a few liquidations taking place, but nothing that we've not seen prior. So that suggests to me, and typically a lot of your institutions will not be leveraged. It's the majority of retail that use leverage, certainly in the percentages that we see, is that, I think it's institutions. We've also looked at CoinShare and so on that are sort of exiting their positions, ready to enter potentially a position at a lower rate. Lots of companies out there hold a lot of cash on their balance sheets. Out of the top 6 companies in America, I think it's only Apple that have more debt than cash at the moment. So are they holding cash ready to accumulate? If you look at Buffett's fund and so on and so forth, doesn't have to be crypto, whatever. Are they expecting a little bit more of a downturn with the Fed? We'll see. One thing I'm really excited about and looking forward to, excited probably isn't the best word to use, but certainly anticipating and watching very closely, is how markets open on Monday and the traditional side of things, because of course our market will echo over, and you can see the NASDAQ and the S&P and a number of other stock indexes did see a decrease correlated with our market, given all the reasons that we've mentioned. El Salvador continue to buy Bitcoin. Lots of memes going around with the president in like a McDonald's outfit and so on and so forth. I don't think that would be the case. The El Salvadorian president really believes in what he's doing. They just continue to accumulate, along with people like MicroStrategy and a number of other people. All these big whales continue to do the same thing on every single pullback. This really takes Bitcoin off the table, even though hodlers may not affect the price on that day at the margin. They do in a roundabout way, because they take liquidity off the table and increase scarcity. So it's all correlated. This is something from Lynn Oldham, who everybody should be following. She's one of my favorite market participants, one of the favorite market commentators across the board. As a general rule, stocks outperform commodities over the long run because they are able to compound and grow. However, during inflationary decades, such as the 1970s and 2000s, stocks tend to underperform commodities. In my opinion, we are still in an inflationary period. It's apparent. I mean, look at the CPI. The CPI, the Consumer Price Index, came out at 7%, which is, I think, 1980s was when it was last at that kind of a level. This isn't going to go away anytime soon. It may decrease and kind of become normalized, if you will, but in my opinion, this is still, even towards the end of the year, going to be at 4 or so percent, which is still a high level of inflation, considering governments around the world, they always aim for a nice round figure of 2. So that means, and I would put Bitcoin in a potentially more correlated commodity, as it's supposed to serve as a sort of inflationary hedge, than an equity. But that's really an open debate. So that's an interesting kind of take on things. So that's largely what I have for you guys. I think I've waffled on for long enough. It was really just a short and sweet update. We know that the markets did see a bit of a pump back. I'm personally hanging off a little bit. I like to see, the only thing, like I say, that I accumulated a bit more of, and it was only a small amount, was ADA on that wick. I will be going, I mean, I'm all in crypto as it is. I do obviously have income streams that kind of build up over time if I don't deploy them into the markets. So that's what's happening for me currently, personally, to be 100% transparent with everybody. And when I've kind of seen, you know, when I can see what's beneath me, or when the dust settled, then I will be redeploying, because my ultimate game is to accumulate as much cryptocurrency as I possibly can, in anticipation that this technology really takes off and sees exponential growth in terms of adoption, due to it being used and utilized in the world as we know it, in the same way the internet is, and so on and so forth. But we've spoken about this in great detail. So I'm really going to have to love and leave you on that note, guys. Remember, we need to watch what the Fed do. We need to watch how markets open on Monday. We're in a sort of macroeconomic game right now that we have no choice other than to play. But I think Bitcoin and crypto will be the victor over time. We're just going to experience some volatility to get there. All I have for you in the video, guys. If you've enjoyed the content, like is always appreciated. So is a comment, and I'll catch you all in the next one. Thank you very much for watching, ladies and gentlemen.